Now, since I've been talking about galaxies, every time frame obviously relates to a whole different space on its own. We need to always ask ourselves whether or not there's going to be threats of meteorites or high new impacts threats. Okay, so once in the hourly chart, you always need to ask yourself. You need to check in the calendar whether or not there's going to be high impact news that are going to distort the outlook in the short run. Okay, I cannot emphasize that enough. Over time, you will notice if you are a beginner trader that unless you keep on top of the high impact news that you know are going to be moving the price, you will be repeatedly over time making a common mistake, which is you're going to be entering positions that are going to get you into unnecessary losses just because the experimentation on your trade, your play, wasn't actually purely based on a technical edge that you've identified, but rather you got whipsawed by fundamental news. Okay, it also depends on how wide your stop is, but just bear in mind. Okay, so what I recommend is that you check the calendar at Forex Factory, and if you see an event flag in red, so allow me just to give you an example. So you come to Forex Factory, and if you see actually an event that is flag in red, then ask yourself, does it have the potential to move the market to an extent that might threaten my stop? And if that's the case, personally myself, I wouldn't see this as a major concern, like these speeches by Draghi or by Kanye. At times, Draghi can actually move the market, but after the ECB is out of the way and everything has pretty much been shared and rebuilt in terms of monetary policies, I wouldn't be so concerned. In terms of core durable good orders, I wouldn't be concerned either. So personally myself, unless it's something like jobs report or central banks, I personally would most likely brush it under the carpet. Okay. Now there's a website which is very cool. It's called Fast Economic News. And the good thing about this website, which I learned quite a few years ago, is that if you have any doubt about whether or not an event is going to be moving your market more than X number of pips. So essentially, we were just talking about the core durable good orders. So there it is. Okay, so you click on it, and it's going to show you the history of all the their releases, and just try to identify when was it that we had a fairly good divergence between the actual and the forecast. So for example, here we had 2 and the forecast was 0.7. So what we can do, that was July the 25th. So if you click on this chart, on the section here, chart, and this was an event at 8:30, okay? So if we come to 8:30, notice that it represented on the dollar Japanese yen. You can here actually select any pair you want. So you can actually see that an upbeat number with a 1.3 positive divergence on the core durable good number release led to a spike of about 10 pips on the dollar Japanese yen. So if you're going to be playing a position which has a stop of 40, don't be too concerned about this data release, just because the potential of the market to move is between 10, perhaps 15 pips on a divergence, on a positive divergence, okay? And then you can obviously just go back and have a few more looks around, you know, whenever we've seen here, again, 2.7 versus 0.8. So you go to the chart, and that's April the 25th. At 8:30, we saw a spike of 84 to 88. So again, you shouldn't be too concerned. So that's why I'm saying that these red flags or red factory icons are actually at times very misleading. So don't be too concerned, and do your due diligence by first understanding what's the potential of how much of a price mover this event is, okay?